All right, guys, I'm going to actually get started. Thanks for joining. My name is Paul Pignataro. I'm founder of the New York School of Finance. I'm actually really excited to have you guys for this fall because we're doing something a little bit special. As you probably have seen on YouTube, we've done an interview prep presentation last fall. We're now going to extend and offer all of you guys to come into our entire, what we do in person, our entire 5-day crash course. We're going to break up into several hour sessions that we're going to include you guys into if you're interested in learning about this. So I think you guys will get to know me pretty well from here on, and we'll be kind of online students. Again, as I mentioned, there's no cost to this. And the reason why we're doing this, I think a lot of you guys probably know about our summer, kind of fall and spring semester-long programs where we teach you guys in the morning analyst skills, kind of how to be an analyst, and then we place you guys into internships. And we've been excited. We're excited to say that we've placed a little over 90% of you guys into banking and advisory roles. And so, you know, we want to increase awareness of this program, and it's a bit of a competitive program. It's not super competitive, but you know, it's important to know a little bit of modeling before you come into the program. So we figure if we offer you guys just the same 5-day crash course that you might get for some other programs, just open for free, then maybe that would encourage you guys to kind of be excited about and increase awareness about this type of modeling. So the first in the series is the investment banking interview preparation, and I think it's timely because there's a lot going on with career fairs, and so I want to make sure I'm handling all your questions about that. I also have my colleague Luis Romero online, so I'm going to give you a little bit of background on myself, a little bit of background on him. I want to give you my perspective on recruiting. I want to talk about career fairs, how you should position career fairs. And then Luis is going to come on and just talk about the investment banking. We have a little pyramid, all the different departments in an investment bank, what it's like to be at these different departments if you're kind of deciding about what you'd want to do. And then we're going to do just a structure of what to expect in a typical first round interview. So hopefully we're going to get all this down in about an hour and a half. And the way, you know, I kind of want to start is if you don't know, haven't looked up my background, I actually started at Morgan Stanley. I was an analyst at Morgan Stanley. And I went to NYU, and when I was hired into the firm, I also volunteered to be part of the recruiting process, be part of the recruiting team, which meant going back to campus and interviewing students. So this little part has a focus on juniors going into senior year, but I'm going to also address MBAs and professionals as well. But my perspective was, if I had known what went on the Morgan Stanley side while going through the career process as an undergraduate, I think I would have been a lot better off. So I know you guys have submitted resumes in drop boxes and things like that, and I think it's helpful to know that what we do is all those resumes get stapled together in a binder, about 700 or 800 resumes, and the 4 or 5 of us that have volunteered to be on the NYU recruiting team or any university recruiting team sits together. It's probably like 10 o'clock at night, any time that we can figure out that we all have a free time, and we flip page by page through this book. And I remember, I thought it was about 800 resumes, but I don't know if that math makes sense, but it seemed like a lot. And we would narrow it down to about 40 or 50 people. And we do it by grouping people into 3 categories. Number 1, who's gotten the investment banking offers, who had prior summer internships and had gotten investment banking offers. So if you guys had prior summer investment banking summer internships and did not get follow-on offers, then you might be in trouble. You really have to have a good story for why you did not get that offer. Number 2, if you didn't have a bulge bracket banking internship, who had like the M&A internships at maybe boutique funds or at hedge funds that probably had good modeling or received good modeling skills and might interview well and might be good analysts. And then 3, the third category is people that we know. So we'll flip through and we'll say, and maybe I'll note like a friend or somebody that's maybe reached out to me and say, oh, I know this guy, I spoke to this guy, let's interview him. And we narrow it down to 40 people. So first lesson there is what I'm going to focus on, or what I'm going to mention when I talk about career fairs and things, is you need to make yourself known to the people that are going to be on the recruiting team, and you really have to do that. So I'm going to talk about how to strategize in career fairs. But my point is, in this story, we'd go to campus, and the people that went to campus were basically the first-year analysts and maybe like an associate who's kind of more the head of the recruiting team, kind of driving this. And I would personally ask, so we narrow it down, this is about 40, 50 people. I would ask one basic question that would easily, for me, narrow it down to about 15 people. And if you've watched the YouTube presentation before, you probably hear the similar question, but I'm going to try to make the rest of the presentation different. And that question is, why do you want to do investment banking? And it sounds so simple, but it's not. People, if you're not prepared, I do not get a standard answer. And people are still signing on. So I usually like to make this part interactive and open it up to you guys, but let me wait until people are finished signing on and we'll make the latter portion interactive. But usually when I ask people why you want to do banking, I get maybe some standard reasons like, well, I want to work with smart people. I want to work with competitive people. I want to, what else do I get? I want to make money. I want to bring in deals. Somebody said, I think last year we went to an in-person presentation. So I want to bring in deals. Well, obviously that I want to bring in deals doesn't fly, but working with smart people, I get a lot. I want a competitive environment, I get a lot. And although that's a good answer, if I was the interviewer or when I was the interviewer, I would turn that around and say, well, why don't you work for a nonprofit? Or why don't you go for equity research if this is investment banking where there's smart people? So the point is a good answer to why you want to do investment banking, which is the seed for your whole impression that you make on an interview, stems around what investment banking does to drive profits to the firm. And this could be applicable to not just investment banking, but equity research, to other departments in an investment bank, or any other job. What is the specific role that you're interviewing for? How does this group or this role within this group drive value to the firm? So M&A, or investment banking, is two things. It's M&A and it's underwriting. What's the reason for M&A and underwriting? Well, when you're a managing director, you'll realize that you have to sell M&A and underwriting business as an initiative, obviously, to make money for the firm. And the selling points are M&A and underwriting are initiatives that help drive growth in business. So if you can find an answer that explains and centers around why you want to learn M&A and investment banking, and how investment banking is M&A and underwriting initiatives that help drive growth externally to business, that's a good answer, and I rarely get that. And that's an easy way to narrow down from 40 people to 15 because people just don't think about it that way. The second component to that is you have to make it personal, right? So, I started a company, and when I was a sophomore, and I realized how difficult fundraising is, and this made me realize that in my initiative in reaching out to venture capital firms, I really wanted to understand how they thought about underwriting, how they thought about raising money. And the whole idea behind growth through underwriting and M&A is a process that I want to learn. That's why I want to do investment banking. That's a good answer. So think about that. And think about that not only for investment banking, but any other group that you want to apply for. Think about what the group does to drive value. The other thing is that I want to open up just as an intro while people are logging in. This is one of the two most important questions asked in a first round interview. The second one is just an introduction. Tell me about yourself. Whether you are walking into a room, and I don't know if you've heard or if you've experienced these kind of stories where you walk into a room and the MD kind of has his paper up and he's expecting you to engage him, which I think is ridiculous. I've never done that before. I think but you hear about that. Or when you walk in and somebody says, well, tell me about yourself. Or you walk in and somebody says, well, why are you here? Well, you should have prepared a 30 to 40 second pitch of yourself. You're there to sell yourself. You have to have a pitch for yourself, and the pitch should be centralized around this reason for why you want to do investment banking. And so the best way to present that, in my opinion, is number one, explain who you are, explain where you're from. Number two, explain pivotal moments in your life that point towards why you want to do investment banking. So I do this in our class. We do this in our class in the mornings, and we try to get, talk to some people and say, well, what's your story? And we try to turn this into a really streamlined reason for why you want to do investment banking. So for example, we'll have somebody, let's say from Singapore, and he'll say, well, my name is John. I'm going to generalize his name. I'm from Singapore. And this one person had actually a pretty good story. He said, well, when I was growing up, my father had a factory business, and he ran into some problems where he had to raise money to continue his business. And if I had understood how to go through that process, I would have helped out his company. So that led me to be interested in business. I got accepted to a university in the States, and I was able to get an internship in investment banking at a small boutique fund, where I was able to really understand those skills, really understand the process behind raising money in M&A and the modeling behind that. And now I want to transfer that into a full-time role. That's a good answer, because you've in your introduction, you've explained who you are, you explained about yourself, you tied what you've been doing in the past towards your reason for investment banking. And so it's not always going to be that streamlined, right? So I've spoken to people that were maybe lawyers or that had a law degree and realized, well, I want to do banking. How do you think about the transferable skills between law and banking? So this person, for example, was in corporate law, and he said, my name is this, I grew up here, and I came to this university because I wanted to study law, because I wanted to understand the structure behind business entities and how they're set up. And throughout my university, I realized what interested me more was not the actual structure, but how these entities grow. And what are external measures of growth And after further studying, I realized that investment banking is exactly that. It's what drives growth through business, through M&A and underwriting. So this is what I want to do. So you're basically letting me know that there's a progression in your thought process that's leading you towards this, and this has been your ultimate goal all along. It sounds corny, but that's kind of what you have to do. So part of the benefit of kind of, thinking about your story is really reassessing who you are and packaging it up for somebody. So we're going to review that. We're going to review kind of what the structure is of a first round interview. But one thing I do want to do, and I want to take your questions, is I've had a lot of questions around career fairs. So you guys are probably in the middle of career fairs. Hopefully they haven't passed. I know there's a couple that have passed already. But I've been getting a lot of common questions, and I want to handle them, and then I'm going to pause, and I want to see if you have questions on everything that we've said. So one thing is, now is obviously the time for you guys to focus 100% on networking. And if it helps paint a picture from the idea of me at Morgan Stanley going to campus, is the first year analysts are kind of in a way the gatekeepers from the next hires. The first year analysts are the closest. I remember being an associate and going to the first year analysts and saying, who are the good guys? Who are the good seniors that we should be looking to hire? And you want to make sure that you're known and that you're on that list. So what you need to do is go to your alumni database and reach out to everybody that's at the bulge bracket banks or whatever job you want, and reach out to those first year analysts and make yourself known. But prior to that, you should have a good, solid experience. You should have a good story packaged, because they're going to interrogate you and ask you. So you definitely want to make sure you're reaching out to all the first year analysts. You definitely want to make sure that you are asking them out for coffee, making yourself known, asking them what the recruiting process is. And I would recommend to put together a 4-sentence email that's basically a summary of your pitch that you would send out to all these first year analysts. And a good 4-sentence email is something like, my name is John, I'm from Singapore, I'm currently a rising senior at whatever firm. You should have a good internship. I recently completed a summer internship at a boutique investment firm where I was responsible for working on XYZ transactions. Number 3, sentence 3. My goal, what are your goals? So number 1, intro. Number 2, sell yourself a little bit. Number 3, what are your goals? My goal is to apply this past internship and my skills towards a full-time role as an analyst in an investment bank. If you did an internship that was a little bit different and you realized you didn't like it and you wanted to get into banking, you can say, well, let's say you got an equity research internship. You could say something like, while this internship was a good experience, stay positive. I realized that although I like the valuation aspects, I really want to understand better what drives growth through M&A and underwriting. So my goal is to transfer this experience into an investment banking role. And then finally, 4, ask for a phone call or coffee. It'd be great to take 5 minutes of your time or a quick cup of coffee to discuss any potential opportunities or what the recruiting process was like for you. You need to get yourself out there and make yourself known. So when you go to the career fairs, you could either see these people or would have met these people before. And I remember when going to the career fairs, either everybody floods at Morgan Stanley, everyone floods Goldman Sachs, and I used to think about, well, what's my strategy? Maybe I should go there later. Maybe I should go to the booths where there's nobody there, and you know, maybe since there's nobody there, they'll feel bad and they'll give me a job or something like that. Or maybe I'll go over there and then people will stop coming into the Morgan Stanley group will die down, and then I'll go over there later. It never really happens quite like that. People will always flood the bulge bracket banks forever, and it doesn't matter. My recommendation is getting in front of somebody and talking to them for 30 minutes at the career fair is not a strategy. The best strategy is to just collect as many business cards as possible. Because from my perspective, and this is one thing that I wish I knew when I was an undergraduate, is nobody's going to remember you. There's so many people that you're meeting when you're on the other side of the booth. You're getting flooded with people, flooded with questions. You don't remember faces, you don't remember names. The only thing you have is a business card. So I would go out there and just go from booth to booth, collect as many business cards as you can, and have your lasting impression be that 4-sentence email and the invitation to coffee, which I guarantee you a lot of people won't do. And your goal through all of this is to make sure you're selected for a first-round interview. After the first-round interview, there's not much you can do. You've got to make sure you have the right internship, the right investment skill, the right technical questions, the right, have presented yourself properly. But you're going to the career fair, get the business cards, follow up with an email, and get the right, make the impression in the email after the fact. So I think I covered most of the major questions regarding career fairs and things like that. What I do want to do is I want to open up to questions, see if you want to make this interactive. Then I want to go to the presentation. I want to introduce Luis Romero, and he will go through kind of the overview of an investment bank, the basic structure of what a first round interview will look like, and then we'll take it from there. So let's see if you got any questions. Okay, great question. When getting coffee with analysts, what to discuss? So there's a couple things, and there's a fine personality line that you want to walk, and this is difficult. Be careful, and I've had this happen to me. You can have a close friend get into investment banking, and then he comes back and he says, "Oh, there's a spot opening up. Why don't you come out and let's go for coffee?" All of a sudden, he's evaluating you in terms of, will you be a good analyst? Don't cross the line of being professional. So my point is, when you're having coffee with analysts or a drink or whatever, you want to be personable. You want them to know that if you're working 100 hours, you'll still be polite and a nice person, and you're still, you're somebody that you can work with. At the same time, you don't want to be too personal. You don't want to be talking about like your boyfriends and your girlfriends and things like that. And you want to keep it professional. And at the same time, you want to make sure you're selling yourself. You want to make sure that they know that you have skills. Number one, make sure that they know that you can build a model. So take our series. Like I said, there's no cost to these series for the next online series. Make sure you're selling your skills. Ideally, you need to get an investment banking internship. And if you guys are real undergraduates and you guys have not had an investment banking internship, definitely look into our program. Or if you're able to get an investment banking internship at a bulge bracket bank on your own, that is awesome and ideal. Definitely push for that. The goal for these interviews with analysts is to make sure that they know that you are somebody that they should be selecting when it's time for first round interviews. And that's the best way I can put it. So it's probably going to be a 30-minute conversation. First 5 minutes are going to be, hey, how are you? How's senior year? How are your classes? This and that. Second question, they're probably going to get a little bit serious. So why do you want to do this? Are you sure you want to do this? Really, he's going to kind of try to persuade you out of it. It sucks. I'm working all night. I haven't slept. This is my 5th coffee. And you want to turn around and say, I know what it's like. I did it. Ideally, you could say, I've just finished an internship. I worked on a couple deals, and I know what it's like. He's assessing you. He wants to see if you know what it's really like, that this is something that he just read about in the blog, and he wants to see that you know what you're getting yourself into, and he wants to make sure that he can recommend you to his associate and you're not going to embarrass him. That's the idea. Okay, bunch of questions. Lot of non-targets, a lot of non-target guys. Yeah, I mean, listen, I don't mean to, this isn't about, I'm doing this because I'm doing these interview prep presentations, I think, and just a side note, if anybody is, and I think I've spoken to a few people, is part of a finance club that has over 50 people, I'm happy to go in and talk to you guys in person to make it a bit more interactive. I think a bunch of you guys have. I have 75 university presentations lined up. So, you know, part of it is just because this is what I do, and I'm a weirdo and like doing this. But at the same time, if you're from a non-target school, you got to set yourself apart. If you're from a non-target school, it's a double-edged sword. There's a benefit in you being proactive, because if the banks aren't coming to you and you're going to the banks, there's probably less of you going to the banks rather than the banks coming to you, and then all of a sudden there's 300 people that they have to narrow it down to. But you have to be assertive. You have to find banks. You can go to neighboring career fairs if other firms allow you to, and just get business cards. The best thing I'd recommend is to reach out to banks and firms and use your 4-sentence email to navigate through and try to find out who is in charge of hiring within the groups. And this is a tough question to answer. I don't know who wrote that, and I don't have time to select you out individually, but again, you know, our program in the summer, I don't want to be too, my point isn't to sell the program, but we've placed 92% of people. These are people come to our program because they couldn't get another internship, to be honest, right? And they're getting bulge bracket banking jobs, they're getting jobs at elite boutiques, they're getting jobs at other firms and funds too. Most of these guys are from non-target schools because they have a tough time getting in. But if you're from a non-target school, my recommendation is to really try to leverage your network of friends and family to try to get a non-target position and leverage that. And you can send me an email and I can kind of give you more information on that. Someone asked a question about cover letters. We'll do something on cover letters. I wouldn't do a cover letter anymore. We're done with cover letters unless specifically asked. I think Breaking Into Wall, I don't know if you guys know about Breaking Into Wall Street. I think they're great. They do an online course. We're going to do a crash course, but they do very technically detailed courses, you know, add-ons that I would strongly recommend. They also have a kind of cover letter template. I'd look at that, but I wouldn't really focus too much about that. Okay, this is what I'm going to do. I got your questions there. There's tons of questions coming. I want to, Luis, are you there? If you're there, Luis, can you kind of raise your hand? I'm going to pass it off to Luis. I want to go through your questions so I'm not pausing like this. And then I'm going to interrupt Luis. And when I see some good questions I think are relevant, I'm going to answer them and kind of address it. Okay. Okay, hang on. Let me just get, oops. Sorry guys for the pause, but people are signing on, and so when I click on Luis, the new person that signed on was clicked. Okay, Luis, your mic is there. Can you hear me?
Yes, I could hear you. Can you hear me?
Yeah. Okay, so guys, I didn't give
All right, great.
Luis Romero. I didn't give a formal intro to Luis Romero. Luis Romero was an analyst at Credit Suisse. He moved on to a hedge fund, and now he's in the process of starting his own advisory shop. So he also is obviously working with us and can give you a great perspective on interview prep and things like that. Luis, I'm going to kind of make you the presenter so you can flip through the slides,
Okay.
and then let's take it from there. Okay, go for it. Oops. Can you hear? I can't.
Yeah, I could hear. Can you see the screen?
I can, yeah. Can you not?
Yes, I could see it. Let me just see one thing here. Try to adjust this. Share the screen. Just give me a second here while I adjust the screen. I want to put it in presentation mode. There, I think everyone can see it now in presentation mode. The full screen is viewing. Can you see that, Paul, on your end?
Yeah.
All right, great. And you're also taking a look at the questions that are coming in, right?
Yeah, I was just about to answer one, but go ahead if you wanna go.
All right. Okay, that's fine. Well, thank you, all of you for attending. I'm pretty sure you guys are going to find everything that we're going to be touching on very insightful and helpful, especially now that the new school semester has started. And a lot of these banks are going to start doing on-campus Korean openings where you guys are going to go and speak to them. So hopefully a lot of this stuff is going to be insightful for you guys. Let me just go through some of the slides over here so we could start going into the proper way to prepare for the interviews and the structure of an investment bank. Paul, do you want to touch briefly on this slide since you put this together, or you want me to cover it?
I don't mind. I mean, it's up to you. Yeah. I mean, I can give one. Yeah, sure. I could do an overview, and you want to throw in your input if you want. So
yeah, that's fine.
yeah, I did put together the slide. So this is, I mean, my point is, and I think Luis, just to give you perspective as to what I was trying to accomplish here is, this is my impression on a structure of an investment bank, at least for somebody that's looking for, kind of what do I want to do, right? And I think of it as a pyramid because there's less people on top and there's more people on the bottom. And then the point of this and why this is part of interview preparation is because it's going to help you answer why do you want to work for a specific portion of this bank if you understand how each of these groups integrate within the larger role of the bank. So top here is senior management. I don't know if I can kind of draw stuff here. Can I draw stuff now? Top is senior management, right? So senior management, CEO, CFO, treasurer, things like that. Underneath, investment banking. See this whole bracket, investment banking. How do I get drawing stuff here? So the investment banking here is really broken up into separate segments. And at the top of the segment, we have coverage. Coverage is the product groups, right? Coverage is broken up into different products. So if you're kind of looking at investment banking and the job is energy, what does that mean? That means that you are working in a coverage group. Products are divided also into healthcare, they're divided into consumer products, they're divided into tech, media, telecom, and what you do in coverage is you put together pitch books. Pitch books that help sell the deal. What do I mean by selling the deal? Well, if you're a managing director, your responsibility is to cover, let's say, 5 or 6 companies. Let's say it's in the tech industry, right? And one of those companies is Microsoft. And as a banker that covers Microsoft, you're responsible for going to the management of Microsoft and trying to sell them one of 2 products. Those products are the products that entail investment banking, which is underwriting or M&A. So you'd go to, maybe Microsoft wasn't the best example, but you'd go to a company and you'd say, hey, this might be a good time to raise money. Of course, Microsoft doesn't need to raise money. Or you'd go and say, hey, maybe you would prefer going out and buying some other businesses. Anything that deals with making money for the bank dealing with underwriting or M&A. So you put together a presentation that lays out all these different strategic alternatives. And let's say the board and managing director says, well, all right, Microsoft says, all right, well, we don't need to raise money, obviously, but maybe we're looking at acquiring other businesses, maybe hardware or any type of other business right there into the surface, now. And why don't you come back to us and give us a list of companies that might fit our profile? So when that happens, the job goes into the M&A department. And the coverage officer goes to the M&A department and says, listen, Microsoft might look to acquire some businesses. Why don't you look for some likely target companies, understand what they're looking for, and why don't you build some merger models that would help determine what a combined entity would look like, because this would help us understand, if we understand what the financial implications are, we can help either sell the deal or maybe say that this isn't the right company. And so for that reason, mergers and acquisitions tend to be more technical and more modeling focused, and this is why everyone wants to get into mergers and acquisitions. Now, if the IVD coverage officer happened to sell miraculously an underwriting deal for Microsoft, and they were to say, yeah, we want to kind of raise some equity, then the job would go over to the capital markets desk. This is the section underneath mergers and acquisitions. So the equity capital markets guys, they are still within the investment banking department, although they're sort of a bridge between banking and sales and trading. The equity capital markets guys would put together a section of the presentation that would say, listen, if you want to raise money in this market, this is what it's like. This is how much money you could raise. Your company is highly valued right now, which means people are paying a lot of money for your company, which means you can get pretty good value for your stock right now, but maybe you can't raise $1 billion. Maybe you can raise like $500 million. That's the equity capital markets expertise. They'll put together slides that will show maybe recent acquisitions in the past, various equity structures. Maybe you can't do equity, maybe some sort of convertible structure. This is what the equity capital markets do. So you'll be also predominantly be doing pitch book stuff. And that section of that presentation will go back, and you'll go back to Microsoft, and Microsoft says, yeah, we want to raise that money, that sounds good. Then the job will go to the sales and trading desk. Now you're sales and trading. If you were to interview for sales and trading, what you would do is you would do something called book running. Book running means trying to sell this potential equity raise. Calling funds, mutual funds, asset managers saying, hey, Microsoft wants to raise money. Before we put it out into the market, would you be interested? And they want their book to be oversold. An oversold book means there's a lot more buyers, right, that's ready to go. And once you have this book ready to go, then you would execute on that trade. And nowadays, trading is just computers like a video game. That's kind of really what it is. But you do make some good money. So that's the idea. And the reason why it's helpful to understand this is because, yes, as an analyst, you're doing a lot of pitching. Yes, as an analyst, you're doing comps, PPAs, DCF. But the reason because the investment banking generates such large revenue for the firm, and because they're really go-betweens between senior management, between sales and trading, and also some other areas of the firm, it's the most visible. It's easier to go from investment banking to other parts of the firm than vice versa. And that's why a lot of people want to start in investment banking. This also should help you realize why everyone wants to do M&A. Traditionally, private equity firms and the top hedge funds only hire out of M&A because they know that M&A guys want to do the most modeling. So when you're interviewing for an investment bank, people might ask, what do you want to do? And if you say M&A, that might make your chances tougher. Be careful of that. And I got a secret to tell you. There are some groups, and this is something to investigate, there are some groups within coverage that do their own M&A because they don't trust the generalist M&A guys. Energy, because energy modeling is quite specific. Actually, Breaking Into Wall Street has a pretty good energy module. Real estate. So a good strategy is to find a story for why you'd want to do work in some sort of obscure group in investment banking, knowing they do their own M&A, knowing that you probably have better chances of getting accepted into that group because everybody wants to do M&A, but also knowing that you're still going to get M&A experience. And that's what I did. I was a math major, so it was difficult for me to get into investment banking, and I played the energy strategy right before Enron happened. Underneath sales and trading, there's equity research. You see this double kind of barrier here because there's this wall between now equity research and sales and trading and all these other firms. But equity research isn't so bad. It's kind of like banking in that you're dealing with models, you're learning about industries, you are writing equity research reports, which isn't the greatest thing, but you're dealing with valuation. The benefit to that is, the drawback is it's not as intense modeling as IBD. The benefit is the hours aren't very long. And then at the way bottom, biggest size of the pyramid, brokerage. This is where the kind of people hoarding people in, trying to bring money into the firm to sell maybe some asset management business. Luis, I don't know if you have anything to say about that, but that's kind of what I wanted to cover.
Yeah, no, I think that's pretty thorough, pretty detailed. This is pretty good. Let's see here. All right. Anything on this, on buy side versus sell side?
No, go for it.
All right. All right. Good. Well, a lot of you guys, for the most part, I assume that you're going for sell side positions, right? Either investment banking, equity research, sales and trading. So, the major difference between the sell side and the buy side is that the sell side may act as an intermediary between clients that need capital and clients that have capital. In most cases, the buy side is the clients that do have the capital. And, if you're at a hedge fund, for example, and you want to invest in an IPO, well, you could use Goldman Sachs capital markets, specifically the book running desk that is racing and taking in all the orders for that particular IPO that Goldman Sachs may be working on. Another example can be if you are a private equity firm and you're looking to find some sort of financing to acquire a company that you want to buy, and you need, let's say $100 million worth of senior debt, you can go to the sell side to any one of these banks to provide that type of financing. In some other cases, some hedge funds may also provide financing depending on the strategy, because some may actually have a strategy that is only focused on fixed income. So for the most part, the buy side is the one that has money. They manage capital on clients' behalf. And the sell side, they usually act as an intermediary to provide advisory service, whether it is via M&A, via raising equity or raising debt for corporate clients. I don't know if there's any questions coming in on any one of these two for the time being, Paul, or if anything comes in, you could just give me a shout and then I could stop for it. None? All right. All right, so now we're going to jump into the interview preparation, for investment banking or any one of the other fields. Finance is a very highly competitive industry, even more if you're going for front office. There's a distinct difference between the front office and the back office, right? In the front office, you're mainly interacting with clients, you're trying to win business, you're pitching business ideas, specifically with CEOs, CFOs, and the management team of companies. On the back office side, you're really supporting the front office from a technology perspective or from a legal perspective. I remember when I was an analyst and I used to have issues with my computer, whether it would be Excel or PowerPoint, I would have to call the tech guys, support, so that they could troubleshoot my Excel or my laptop to make sure that all these applications that I'll be using on a day-to-day basis were working properly. So very important that you understand the difference between the two and know which group and which area within the firm you're applying for. Again, I'm just reiterating some of the things that Paul mentioned. On the sales side, when you're looking at front office, right, you have investment banking. You have your specific coverage groups like retail, real estate, energy, defense, industrials, right? These are your traditional coverage groups that firms focus within that specific industry, and they have relationship, and then they have your typical analyst, associate, VPs, director, managing director within those coverage groups. Then you have your capital markets, which takes into account sales and trading, whether it may be equity, whether it may be fixed income, or whether it may be derivatives. You have equity research, you have asset management. Then on the buy side, you have venture capital, which primarily invests their own capital on startup companies. You have private equity firms, which they basically leverage up companies and then buy them out via financing, mostly via debt. You have hedge funds, which, have different types of strategy, and they are investing institutional money as well as high net worth individuals across different strategy, whether it may be long-short equity, derivatives, or fixed income. And ultimately, you have your large asset management firms like the PIMCOs, Vanguard, Fidelity. Those are the ones that are managing a lot of people's 401ks and IRA money. So, in terms of the interview process, the interview process can be intense and rigorous. Typically lasts between 3 to 4 rounds. I've heard Paul mention before that there were some guys, from non-target schools that they were asking some questions. A key insight is that if you come from a non-target school, more than likely you will have more than 4 rounds of interviews. I remember a while back I've heard people have 6 to 7, even 8 rounds of interviews just because they've come from a non-target school. And that's not to say that you do not have the same technical skill set, but it's really more for the firm to test you behaviorally, test your technical skills to make sure that you are one of the top candidates from that school that the firm is recruiting. So the first part of the interview is typically the behavioral part or the fit part, where the hiring firm, or the analyst or HR, when they're making the decisions of whether or not you fit within the group's culture or the firm's culture, right? That's very important. And you can find out a lot about the group culture or the firm culture. It's really by networking, contacting friends that you may have at that firm, contacting alumni, reaching out to people that you've met, networking and taking them out for coffees, and really trying to find out and get a feel in terms of the culture of the firm and that individual's group. The technical part of the interview process is, again, it's really to assess whether or not you have strong analytical skills and you also have technical skills. A good example for this is not knowing basic accounting of finance, will give the impression that either one, you're really not interested in investment banking or equity research, and you're not competent enough to handle the job. If you cannot tell me how to calculate enterprise value or equity value, market cap, how can I trust you with building a full-blown M&A model on a $2 billion company that's trying to acquire a $300 million company, right? It's really all about how much responsibility you can handle and how you can present to the interviewer that you're someone responsible and you could handle that type of work. So the first round of the interview, typically would be with an analyst or an associate. The analyst is typically the gatekeeper to you getting an interview and being invited for a super day. But the typical interviews, again, it's really about behavioral. Even before you get to the analyst first round interview, sometimes HR would call you. Sometimes HR would be the first buffer or the first filter before you advance to the first round, and they would just ask you typical questions. Why did you go to your school? Why did you intern at this specific firm? And why you want to do investment banking, which is the most common questions out there. But it really depends on the question that you give that is going to separate you from the rest of the pack. So after you advance to the first round, let's say you do well with the analyst, you do well with the associate, then you advance to the third round and fourth round, which is typically are in person, and it's really a super day. You'll be meeting with multiple people within the firm, could be associate, analysts, VPs, and MDs, more often more senior level people. And these super days interviews may last between 2 to 3, even 4, even 5 hours. It could last an entire day depending on people's schedules and how many interviewers you have lined up for that day. But typically it's really just to assess your overall presentation skills. Are you someone that can present well to an MD? Are you well articulate? And do you know your technical skills? And also, the overall fit. Do you fit within the group's culture? Is this a person that we could go out and grab a drink with after working, 10, 15 hours a day and getting out of work at midnight? So, how to best prepare? Know your story. And, Paul really mentioned this thoroughly as well, and it's really about, walk me through your resume. Make sure that you have a story to tell, and this is typically where 40 to 50% of the interview, you want to be able to come across and say one thing that person is going to remember. If you play sport and you were the captain of a basketball team or a football or even a baseball team, how do you display leading or captain skills when you're doing that, or management skills while playing a sport? If you worked on a startup with a couple of friends, what was the process and how did that lead you to be or do or wanting to do investment banking? Those are overall, important things that come out within the first minute or two of the interview. Another one is, give examples for fit questions, typically worth 20 to 30%. And again, this refers back, are you a team player? Can you work well with others? The typical example, they always give is, could you stand to be stranded on an airport for 8 hours with this person? And lastly, it's the technical questions. And technical questions typically worth 20 to 30%. And the reason why I outlined this, that is 20 to 30%, is because anyone could really go home, read a book, and understand how to do a DCF analysis, how to calculate enterprise value, what are the different valuation methodologies that Wall Street analysts use to value a company, right? These are things that you could learn and you could walk someone through in an interview. But having the right personality, having the right story, being able to get along with others, being easygoing, those are the intangible skill sets that they try to find out if you have, and not many candidates have these skill set, because when you're a sophomore or a junior in college, you're still going through the maturing and development stages of your own personality. So these are the type of things that they want to find out and acquire from you. So a couple of examples of behavioral questions, walk me through your resume. One thing to point out, that everything that you have on your resume, you should know why you have it there and know the reason as to why you're putting it there. For example, your school. If you went to a non-target school, make sure you're able to answer why you went to that school. I'm sure that your school has some unique features that other schools don't have. So make sure you're able to sell your school by mentioning those unique features that they have. The previous work experience, right? If you worked at a restaurant as a waiter, or if you worked at an electronics store as a sales associate, make sure you are describing why you picked those internships or those positions, and what did you learn there that is transferable to investment banking, equity research, sales and trading, whatever field you are transferring to or applying to. Make sure that you understand how the skills that you learn there are transferable skills. Extracurricular activities, also very important. Don't put on your resume that you're just part of the investment banking club or a business society and you're just a member and you only show up for the free coffee and donuts. You want to make sure that you are someone that is actively involved. You've taken initiative, you've done presentation, you've hosted some seminars, and you have some sort of a leadership role within that, between that club. That is something that you can definitely mention and speak about, and give specific examples of what you did to show that you want to do investment banking. Again, know your story. Why do you want to do investment banking, investment management, research? Again, these are the type of questions that you need to know what an analyst does on a day-to-day basis. Because like Paul mentioned, if you have an analyst that has just finished working, a 100-hour work week, and he takes time out of his busy schedule to grab coffee, you want to make sure that you understand where he's coming from. In some cases, the analyst may be disengaged throughout the conversation. So again, you want to make sure that you understand that they are working 100 hours a week. You want to make sure that you understand the type of PowerPoint work that goes into when they're putting together a pitch book. Also from a modeling perspective, what type of Excel skills they're using or utilizing when they're building, complex financial models, or they're just building charts, and the level of detail that they have to be when they are formatting those charts to put it on the pitch book. What's your favorite movie, book, sports? These are typical questions that you'll be asked. Make sure you know this and make sure you understand why it's your favorite movie or sport. Why you're applying to the firm. Again, this could be because of the firm culture. There's a big difference between bulge bracket, middle market firms, and boutique firms. There's a big difference. So if you're applying to a boutique firm, you should understand the difference in terms of the responsibilities that an analyst has at a boutique firm versus a bulge bracket firm, right? One of the big difference between the two is that at the bulge bracket level, you tend to work on bigger deals, multi-billion-dollar transactions. One of the reasons for that is because the firm has the balance sheet to provide financing for those type of deals. And the analyst also has a lot of resources available to help him with that deal, whether it is, outsourcing comps to India, whether it is having a night staff work on your presentation. Those are resources available. Whereas within a boutique firm, it's more engaged and focused on the advisory level, where the analyst has a lot more responsibility, in terms of building the model and also interacting with senior management within the company and also within the boutique firm. It's a big difference where at the boutique level, you have to be a lot more resourceful. Whether it is spreading your own comps or working a little bit more on PowerPoint or finding ways to obtain information that is easier obtainable at the bulge bracket level, you just have to figure it out and become more resourceful at the boutique level. So there's a big difference between the two, and you have to convey that explanation. A couple of other examples of overall fit questions, your strengths and weaknesses. Make sure you're able to mention strengths and weaknesses, and again, make sure you're able to back it up with an example of a situation where you display your weaknesses, but then also what steps did you take to improve on those weaknesses? Every answer that you give, you should be able to back it up with an example. Very, very important, because if one person says, yeah, I want to do investment banking because I want to learn about the financial modeling, I want to learn how business grows by implementing mergers and acquisitions, raising capital, or by just spinning off an asset, these are just words. What have you done to really display that you've actually been proactive in taking initiative, right? That could mean you've taken an online course on modeling. You've read certain books about investment banking and M&A and strategic advisory. These are the type of things that analysts at the first year level and then the managing directors at the senior level, they want to see and hear. Can you back up your answers? Give me an example of a project that you've done that involved heavy analytical skills. Why did you choose your school? Give me an example of a project that you've done. Okay, that's a repeat. Can you tell me about a time that you handle many things at once? So this is really being more proactive and being able to juggle multiple projects at once. And this is very important. Having the availability to be a full-time student, be involved in student clubs, being able to work part-time, and also being able to maintain a high grade point average is very important, because when you are in investment banking at the analyst level, you may find yourself working at 2 or 3 projects, even 4 projects at the same time. They have very tight deadlines. And these are some of the reasons why investment banking analysts do work 80 to 100 plus hours a week, because of the number of projects they have all going on at once and with those tight deadlines. The example I'd like to give, when I was a first-year analyst, there was a time where I worked for about a month and a half every single day of the month, and I was constantly working 100-hour work weeks. And imagine having finals back-to-back for a month straight and studying the way you will be studying for finals, pulling all-nighters. That's how I would compare, doing investment banking when you're managing 3 or 4 projects that have tight deadlines. Now, on to the technical questions. And again, the technical questions, these are simple stuff that you could find out by reading a book. by attending our webinars. I'm sure that Paul has some really good webinars online available to the public that really answer each and every one of these questions right here. What are the four most commonly used techniques to value a company, right? You have discounted cash flow analysis. You have comparable company analysis, precedent transactions. You also have LBO analysis. You could even use PEG ratio to value a business and sum of the parts, right? These are questions, these are answers that you should definitely be familiar with. How do you calculate enterprise value? How do you calculate WACC or cost of equity? What is EBITDA and how do you even calculate EBITDA? What is the link between income statement, balance sheet, and cash flow statement? Walk me through a DCF analysis. Again, these are questions that you could easily find out via Google. And when I was an analyst and I was actually interviewing people, if they would get a simple question like DCF or what EBITDA is and how do you calculate EBITDA wrong, I would automatically discount them. That would probably be the second or third question I would ask them. If they had a good story, if they spoke well, but if they had weak technical questions, it would really make it hard for me to advance into the second round because they'll probably be asked that question by my associate, and I wouldn't want my associate to think that I picked someone that has poor technical skills.
Let me just, Luis, add, and I like to, these technical questions will be answered in the subsequent modeling courses. So if you guys stay on, not now, but stay on for the next courses, you will gain enough information to answer these questions and more. And I think during the course that we'll have, we will have a focus on technical interviews for that. Luis's point is just to give you kind of a framework of what to expect.
Yeah, absolutely. And and these are even more questions. What is the difference between EBITDA multiples and PE multiples? Pitch me a stock. For those of you guys that are going into equity research or sales and trading, being able to pitch a stock is very important, right? I've interviewed people in the past that they tell me, look, I like this company because they have a good product, and I think the stock is gonna increase another 10%. Well, where are you basing the 10% from, right? Have you looked at the growth rate? Have you looked at the multiples? How do the multiples compare to its peers? Have you done a DCF analysis, right? Well, what is the expected unlevered free cash flow over the next 5 years? What discount rate did you use or WACC? And when they answer those questions and they look at me or tell me, oh, I haven't done any one of those analyses, so I'm just saying, okay, well, you're just saying 10% out of the top of your head. You're just pulling that number out of nowhere. Where's the basis of that? Where's that coming from? So it's important that you really understand your technicals, and it's important that you have some sort of systematic or quantitative approach as why you're coming up with the price target of a company.
Hey, Luis, can you answer to that? If and it doesn't have to be technical, but if somebody asks, why should we choose you?
Okay. Well, that's a good question. And when they put you on the stand, right, it's a combination of everything, right? It's good to know your story, and your story should have some sort of progression that it's leading to your ultimate goal of being in investment banking. Yeah. When I was a junior in school, and when I went through my interviews, I will always bring a pitch book that I've created on my own to all my interviews. And I will walk them through my thought process, and I will present them through each slide. And then I will give them reasons as to why I wanted to do investment banking. Now, if they will ask me that question of why should they pick me, well, I've gone above and beyond. I've taken the initiative to put this work together, which was just for my own benefit, to present to you guys to show how bad I want investment banking. Also the necessary steps by taking modeling courses, by reading books, by attending networking events, by networking with people, right? You have to pull everything together, all of the work that you've put into to get to your goal. And being proactive, goes a long way in this industry, especially when you're going through the interview process.
Yeah,
I don't know if there's anything that you want to add to that, Paul.
Yeah, I can't stress how important that is, and I always coach you guys that are in our school to take everything that you learned, put together your own, because you can't share what you're doing at the internship because it's confidential, right? But put together your own, take a stock that you like, Starbucks, whatever, your own model, your own pitch book presentation, and show it to somebody. If they're asking you technical questions and they're questioning your capabilities, this is what I can do. This is provable of my skills. And to the question of why should we hire you, if you have a good package story, like I mentioned in the beginning, that explains where you are coming from in the past, why you want to do banking, and it's all packaged, which gives them the belief that you've been basically born to be an analyst. That's kind of, if you give them that impression, it sounds kind of corny, but if you give them that impression, that alleviates all this, well, is he right for the job? Why should I hire him? This whole area is kind of covered in their mind.
Yeah, and believe me, I mean, I've heard stories, from guys that have done our program, the guys that have really put in a lot of work and effort into learning the materials, and they did very well on the internship. They would create their own pitch books, and they would bring it to their interviews, and they will say that at first they were just sending emails and applying to jobs, and they weren't getting any luck. Then they created a pitch book, then they started sending it to managing directors, associate, and then that was kind of what opened the door for them to get their foot in the door for an invitation for coffee and later on lead to an interview. And when an analyst can do that, even at the sophomore, junior level, I mean, kids that have done our program during the summer have come out having that skill set. And, from our perspective, when I see the final product that they can do on their own, it's really, really impressive. So all the information is out there, guys. I mean, it's really about being proactive and finding it and putting the effort.
There's one more thing, Luis. There's a lot of questions, and I'm sorry, guys. There's just a flood of questions, and I'm trying to generalize and just answer. Some of them I'm answering privately, and some of them I'm trying to wait for ones that are general enough for everybody. But you can always reach out to me through email if it hasn't been answered. A lot of people ask about transitioning from like back office to front office, or transitioning from a different role into banking. If you're what's a good way to do that? Do you have any comments on that? And then I can give you my feedback.
Yeah, it's easier. Okay, so if you're within a firm and you intern at that firm, let's say in back office, the best way, and let's say you have a returning offer, the best way to do that is you have to network with the people in investment banking in the front office, and then you also have to be proactive and read books on investment banking, read modeling books, take modeling courses, look at our Annex Advantage program as an alternative to kind of show that you've put in the effort, you've put in the work to sell yourself and become a better candidate for investment banking. That's, I think, from my perspective, is probably the best way to show that you really are interested, especially if you've done an internship in sales and trading, right, which is more technical analysis, reading equity research, understanding the market momentum, and not applying as much as modeling and applying all of the evaluation methodologies. You should be able to take courses to show that you have taken the step to become a stronger candidate to switch to the advisory side. I don't know if you want to add anything to that, Paul.
No, and again, if you guys have any specific situations, stories, and kind of want our advice, just send us an email. Absolutely.
Okay. All right. Fair enough. Other simplified questions. What is a leverage buyout analysis? This is basically what is an LBO. You could do a quick Google search and read what this is. What is the purpose of an M&A valuation analysis? Is a 10 a high PE multiple? So it's a multiple of 10, a high PE multiple. These are typical questions that we ask just to see your thought process. Some people may say no, and some people may say yes, but it's not only a yes or no answer. We really want to see how you look at it, right? You should be able to ask, okay, what industry is it? That's number one. Is it a cyclical industry, or is it a non-cyclical industry? Where its peers at. You have to look at comps, maybe 10, maybe a low PE multiple, depending on how the market is trading at, right? Is it a leverage industry? These are things that you have to look into before you could just give a yes or no answer when you're looking at valuation. What is working capital? Tell me about a recent M&A deal that you follow. This is extremely important, right? Because if you want to do investment banking, and let's say you're applying to JP Morgan, their M&A group, you should be able to know one major deal that they're currently working on or that they've announced. And you should know that deal very well and should be able to talk about it. Because again, it shows that you're being proactive and that you're actually engaged. There's also an SEC filing that gives you all of the information about that particular deal. It talks about the comps, it talks about the valuation, how the deal originated, it talks about how the deal is going to be financing. You can find all this information at the SEC by just going to the SEC and typing the name of the company that have been acquired and just looking for that proxy filing, and you'll have all the information there. So there really shouldn't be any excuse if you're going to interview, let's say, for Goldman Sachs or on the retail, for the retail coverage group, and you're working on a deal that just announced, that you shouldn't know the specific of that deal, right? Because you may end up talking to the analysts that have actually worked on that deal, and that's one way for you to impress them, especially also the managing director. So it's very important that you do your due diligence and you cover the background on specific deals that that firm worked on. Okay. Next slide. All right. Well, I guess before you touch on this slide, Paul, just one other piece of advice that I guess that I can give for those of you guys that are still undergraduate students. Take the extra time to really research and understand what investment banking is, and also take the time to speak to people, because investment banking, as you may do your research and after speaking to several people, you may find out that that's not what you want to do, and what you really want to do ultimately is either be in equity research, sales and trading, or maybe just be directly on the buy side, either at a hedge fund or at a private equity firm. And while you're still an undergraduate, you could do the necessary work that you need to do in terms of prepare yourself, whether it may be technically or whether it may be qualitatively, to get that job while you were an undergraduate student. Because as you move up the ladder, as you become more of a second-year analyst, to go directly to the buy side, it's a lot more difficult once you're in investment banking. I find it in the past that it's a little bit easier when you're an undergraduate student and you have the proper technical skills to go directly to the buy side. The same thing if you want to do sales and trading, and later on you realize that you want to do investment banking, right? Make sure that you start early and you do all the necessary legwork now, and you speak to the necessary people so that you know what you want ultimately and take the necessary steps. And obviously participating in these webinars and then in the other series of lectures that we're going to have can definitely give you an edge and give you a lot more information that can definitely help you and prepare you for your interview process and the upcoming recruiting season. So with all that being said, Paul, I guess I can turn it over to you now.
Yeah, well put, Luis. And yeah, this is really all just to increase more awareness about investment banking, what it is. And again, really, I had a lot of questions about how to handle the career fair, what to do. So the strategy, as I mentioned in the beginning, was really the impetus for this. And then, of course, to invite you guys into the full model crash course that Luis is going to be teaching. So we're working on what time it's going to be, but it's going to be 2 to 3 hour sessions. Obviously, no charge for it. We want as many of you guys in there as possible. We'll send you an email about how to get access to that. And, this was meant just to be a very, very basic, just step one. How should I be thinking about investment banking now that it's September? So hopefully it was helpful in that. We do want to do deeper dives, technical dives, as you get modeling experience, and we'll do that in the beginning of the subsequent sessions coming up. So this will be recorded. Feel free to watch it. Here's just a note here, kind of stay on us. I didn't mean for this to be my name. I don't know how to change it to New York School of Finance, but it should be. But anyway, whoops, I guess I lost where we were. No, Luis, do you have the slide there? Okay, anyway. Yeah. Oh, okay. Yeah, okay. You can put that one too. And selfless promotion. Read the books. These books step through modeling. So of course we're going to give you this stuff for free. It won't be as detailed as what's in the textbooks, but if you don't know that I've written some books, they're up on Amazon. They're bestsellers on Amazon. You can take a look at them if you want a little bit more modeling detail. But what I was mentioning before is follow us. If you go back to the slide before, on YouTube, I post some of our lectures on Twitter. You know, just kind of get on there and you can kind of keep getting a little bit free tidbits of these things here and there. So if you have any questions, let us know. Thanks.